Good evening. Consumers continue to swipe their credit cards for clothes in the first 3 months of the year. This as financial advisors warn of the need to scale down their credit habits. TransUnion Africa's latest industry insights report shows that the demand for credit cards are also up. Weihan Sun is their Director of Research and Consulting, and he joins us now. Weihan, thank you so much for your time tonight. It's interesting that the Reserve Bank said today that credit to the private sector was actually down in the first 3 months of the year, yet your report has a pickup in the rise in credit under consumers and South Africans.
Yeah, thanks, Melissa. Just for some context regarding the Reserve Bank's comparison, what the Reserve Bank said was there was a slowdown in terms of growth, but year on year, from a volume perspective, demand for credit continues to grow. This is in context where the Reserve Banks are comparing, the September 2022 period to the Q4 period, where we saw a significant rise in demand for credit compared to the 2021 period, where we just exited COVID, where lenders didn't have the appetite to resume lending within the open market until certainty was reached post the pandemic, and whether it was a return to normal from a businesses and from a consumer perspective.
Let's look at your report. One could understand the need for clothing accounts in the first quarter of the year, as it could be for school clothes. There was an over 35% increase year on year for clothing accounts. What other, let's call it non-negotiable necessities are there for consumers, except for obviously food?
Well, Melissa, I think the one important aspect we forget is many consumers in South Africa actually purchase their cell phones from a retailer. And the reason is because of the relationship they have their retailer, being the first place of contact where they have their first credit product, being a clothing account, but also having the product on offer in which they're in demand for, which is a cell phone. And in today's world, cell phones are a necessity and not a want and a luxury anymore. So we're seeing a lot of, device sales happening within the retailer space, but also consumers leveraging credit in order to access those devices.
Let's take a look now at new credit cards. According to your report, there was an increase of over 27% year on year for credit cards. I have to ask the question, do you think South Africans are aware of the high interest rate charges on credit cards? And possibly the answer is yes, but there's no other option.
Melissa, the interest rate on cards is actually quite unique. From an interest point of view, from any type of products, interests are actually charged based on the consumer's credit score. So the higher the score, the lower the possible interest rate. Now, understandably, like you said, the consumers are in dire need of liquidity at the moment due to the current economic crisis. And of course, they should be aware of the interest rate that's being charged on those facilities being very high. But South Africa does carry some unique qualities with regards to the credit card, and we do have a 55-day interest-free period. So if consumers are active in terms of repayment of their accounts that are due, they actually can minimize the amounts of exposure of the high interest rate. The interest rate is high for a reason, because of the high amounts of defaults we often seen in the South African market because of the volatility that the market carries. And as a result, consumers should be very vigilant in terms of their minimum payments due every month regarding their cards, but also if they do have any additional liquidity at disposal, they should actually try to pay down their debt relatively quickly.
So interestingly, non-bank personal loans also surged by nearly 25%, and those are loans usually from retailers and other unsecured lenders, and also usually at much higher interest rates. And this once again could show the desperation in the South African consumer, just as you've explained now. But how are banks, retailers and other lenders working to manage this risk?
So from a management point of view, from lenders' perspective, they can't say no, to the open market, because consumers are actually in need of that additional liquidity due to the environment we operate in. So how do lenders combat those potential risks? The amount that's been extended has been lowered. We've seen that in cards. There was not really an increase in the credit limit increases on credit cards, and also the average loan amounts within the personal loan space has not grown substantially compared to the prior year, where higher value loans were being offered within the market.
But Weihan, we do have to look at the good side of the report. Consumers are managing their debt maybe more carefully, as serious delinquency rates, and do give us the definitions of that, so people not being able to repay improved.
So, Melissa, that is to be read with caution, and I must caution the readers on this aspect. So, serious delinquency from a definition point of view are referring to accounts that are overdue for 3 months or more. What you're seeing is a decrease year on year from a comparative point of view is largely due to the fact that there was an influx of the number of accounts that's being active. So, are we saying credit and defaults rates are improving? From a volume point of view, no. If you look at the annual reports coming out from many of the lenders recently, they've actually said from a volume perspective, they've seen surges in terms of how many accounts are actually in default. What we're seeing here from a rate perspective is simply due to the fact that there was a large influx of new accounts entering the market over the past year, elevating the amount of total active accounts. And when you take the number of defaults into consideration, the rate of delinquency looks like it's improving, but it's largely due to the fact that there's a masking effect on the total account volume. So in terms of a story perspective, delinquencies are not improving. It's just a matter of fact from a calculation point of view, it looks like that. On a pure volume basis, we're actually seeing delinquencies increase. And that's largely due to the economic pressures, as well as the lack of income growth. Particularly if we look at our consumer poll study that we did in Q1, only 1 in 3 consumer households actually reported an increase to income levels. And also from the unemployment data that was released recently, we're seeing actually loss of jobs continue to cause a concern within the market.
Thank you so much for your time tonight, Weihan. That was Weihan Sun. He is the Director of Research and Consulting at TransUnion Africa.